What's up, traders? Just want to take a quick look at Tesla. Obviously, there's been a lot of craziness going on involving Elon Musk. Tesla also had a pretty aggressive move from the top to the bottom, and since then, it's had a really nice bounce as well. But now things are starting to shape up once again, and we'll likely have another opportunity very shortly. And I want to get an idea as to where Tesla's headed. So, like always, in order to see where Tesla's going, we need to pay a little attention to where it's been and the recent price action. So I'm looking at this low back here from 2020. That was a crash from the Arona dump. And then since that, went down to $24 at today's prices and went absolutely parabolic up to about $420. Shout out to Elon. And since we topped then, it's basically just been melting down in some form of a descending, broadening wedge or channel, depending on how you want to look at it. So I've got a couple of drawing tools. We're going to go ahead and just pop those up. So we can see here, I have a fib from the low right here. Also, if we zoom back out slightly, have a fib going back to May of 2019. And if we really zoom out on this chart, we can see that prior to that actual fib level from 2013 until we actually broke out of that level in 2020. So for 7 years, we traded very technically inside of this channel. So we know that Tesla respects the technicals. All right, and then from there, we have our low down here in blue. We have the Rona low in green, and then we have both those fib levels drawn up to the macro all-time highs. So if we just zoom in here one more time, we can see we started forming this descending channel right here, and then inside of that channel, we formed this smaller white descending channel. And eventually we broke down from support right here. We did attempt to take a scalp position at this level, and we got stopped out. And then we re-entered the scalp position down here at 108, and it turned out that was essentially the absolute bottom, which corresponds with our blue 382. So very important, we see some clear correspondence at the blue 382. From that level, we were to scalp all the way back to the upside. We did take some of our profits along the way. As always, we locked in gains on the back test of the channel at 52%. We actually took a little bit off the table at 69%. And then, of course, locked in around 100% when we hit our final take profit of $210, which was also the 0.236 in green. So essentially, we peak out here at the top. We come down and put in a series of lower highs and lower lows. We then lose support at the 236 in green right here, and we come straight through the 236 in blue. We then shoot through the 382 in green, and it starts to look like Tesla's maybe not even respecting any of the technicals. And then, of course, we bottom almost perfectly at the 382 in between that and the green 0.5 at our exact green box area. We're able to essentially buy Tesla at a massive discount from all of the cult as they are capitulating and just dumping their Tesla. And then we're able to basically sell it back to them at a substantially higher price. So after we bounce off that blue 382, we come all the way back up to the green 236. So we see both of these fib levels are very important at various times. We then start to find support at the 236 in blue right here. We put in a lower high, and then of course we were expecting the breakdown and retest of the neckline, and that's exactly what we got. We got a gap down, breakdown after Tesla's recent earnings, which was no surprise to anyone that's been paying attention. So that being said, now what we want to pay attention to is, what is the opportunity? Is there opportunity to the upside? Is there opportunity to the downside? And where do those opportunities arise? So we have one more fib that is drawn on here from the recent low at 103 up to the recent high at 217, and that one is in white right here. And all we're doing is just looking at the retrace there. We find some support at the 236, drop down and hit the 382 perfectly, come back up for a lower high, and then we gap straight down to the 382 once again. So now the way I'm looking at this pattern is, we basically have one top, and then we have a second or double top right here, and then we have a neckline. So if we break down from that double top neckline, which is the white 382, the measure move to the downside would essentially just be the range from the top to the neckline. So if we just take our drawing tool and just draw that same line in, and then we just move it over here for the measure move of the breakdown, we know that would take us roughly down here to the 786, or revisit the lows at about $121 or so. So there's potential that we see some support right here at the 0.5 Fibonacci or the 618. But if we were to go lower than the 0.5, we're going to lose this channel again. So the way I look at a channel is, if we're trading inside that range, I would expect that we'll continue to trade inside that range until we don't. And this is the time when we don't, we break, and then we're able to scalp that opportunity back to the upside. We would expect that area to reject us when we come back to it. And in this case, that was not the case. We actually see continuation. So now we're back inside the channel again. So one of two things: either we no longer respect the channel because we broke out of it once, or we still respect the channel because we're back inside of it now. And honestly, I'm kind of 50-50 on that one. I still respect the channel, but the fact that we broke down from it so powerfully tells me that we can't rely on it the same way that we could if it was trading inside that range for, 5 or 7 years without breaking out or breaking down. So now there is one other area of interest we want to pay attention to, and that is our blue box right here, not only on the descending channel in yellow, not only on the 0.5 right here as well, but if we just extend this out to the side, we see that that was actually a gap fill as well from when we got that aggressive move back to the upside. And essentially that corresponded with the breakout of our white descending channel as well. So I'm definitely looking for this area to be a gap fill somewhere around like 150, maybe slightly lower is my target short term. Now, what I'm not sure of is, will that area actually hold when we get down to it? Because if it does hold, the trade setup that we'd essentially be looking for would be a bounce back from the bottom of the range, at least to retest our white 236, maybe 20 or so percent, the heart line of the channel, possibly even come back up here and test the top of the range, or even all the way back to the top of the channel. So we're looking at somewhere from around 20 to 50% potential to the upside. Now, obviously, we have to wait for that situation to arise, but it's worth paying attention to. Now, the other option would be to obviously sell Tesla or short it, assuming that we're actually going to go back down and revisit the lows. Now, I'm not sure which one is going to happen, and honestly, no one is. So if they tell you there are, you can know not to believe them after that, because no one knows, not even the market. But what we can pay attention to is what's likely to happen and why. So if we know we found some key support at the 236 in green right here, we know we found some very key support at the 382 in blue right here as well, and then we also saw resistance at the 236 again, we only have a couple of levels in between the low down here that we hit before and the high right here that we recently topped out at. And those are obviously the blue 236, which we've already lost and broke down from, and then we have the green 382 here, and then we also have a retest of the 382. So if we were already losing the 236, the next likely target, if we continue down, would be the green 382. So around $138. And then, of course, if we break through that, we would most likely come down here and revisit the lows once again. So maybe that will get us that extra little push down to the 0.5 at about $99, or maybe we'll break down further from that level and we'll see this big cluster of confluence right here, which is the 618 in green, the 0.5 in blue, and also the 1.5 Fibonacci extension from the most recent low to the most recent high. That would be our extension target as well. So that is our key level that we're looking to buy back in at. Now, will we get down to that level in the high 60s or low 70s? Honestly, don't know. But if we do, I'm going to look at that as a buying opportunity. So if we just move over here a little bit to the side, we'll see the potential shorting opportunity that we discussed, the breakdown from the 236, and then, essentially a 12.5% stop loss if we come back up here and reclaim this level. And then obviously a roughly 39% move down just to retest the recent lows. Now, obviously, if we do come down to that level, we would probably see some kind of bounce as we got down to it. But in all reality, the move we'd be looking for is likely another 58% from where we were at to the downside. So obviously we don't know what the fundamental reason for this breakdown would be, or what's going to be happening with the company, or what kind of Elon tweet will come out, or maybe what kind of regulation or lawsuit will be opened up against Tesla or Elon or whatever. We don't know what the fundamentals are going to look like if and when we get that breakdown, but realistically we know the levels. So as far as I'm concerned right now, the main area we're watching is the breakdown from the 236 here, which has technically already happened. We have our next support revisiting the lows around, the low 100s, 100 to 108, somewhere around there. And then after that, the real target is going to be down here at about $69 or $70. So while there's lots of arguments that can be made, either bullish or bearish for Tesla, electric vehicles or internal combustion vehicles, or the future of the company, or EVs or limited supplies, we can have that conversation all day. But the truth is that that's all fundamental stuff, and we're just looking here at the technicals. And the technicals are telling us there's some key levels to watch out for, and they're all to the downside from where we're at now. So it doesn't mean Tesla can't move back to the upside, break out of the channel, and go to new all-time highs, but it's going to need some kind of actual catalyst. And because Tesla is not a cryptocurrency, it's an actual company, and it's profitable, people are going to want to see what the PE looks like, because they're interested in what the price they're paying is relative to the earnings that Tesla is able to capture. So I just want to take a quick look at Tesla right here and pay attention to a couple key levels. Obviously, we were expecting the bottom right here and nailed that trade to the upside. Congratulations to anybody that put in that little double up. And obviously we took profits here at those key resistance levels. And so far that has played out perfectly. But now we're looking at this little double top and holding on to the neckline or hanging out at the neckline. And it seems more likely than not that this is going to break. And when it does, we have a quick move to fill that gap, as well as the measure move to the downside. Now, will there be some buying opportunities along the way, maybe at the 618 or maybe at the 0.5? For sure. But we'll have to look at what the indicator oscillators look like when we come down to those levels. So before we get out of here real quick, I just want to pop up the indicator oscillators and take a look at what we can expect. And if we just look here at the TDMACD, we can see we had a relatively big spike on the MACD. It took us all the way back up to the 200s, the back test. We're still below those 200s, so very clearly in a bear market. And then we got rejected once, we got rejected twice. And that corresponded with the bearish rejection of the histogram on the slope line from below, at which point in time the slope line flipped red. So I am expecting continuation to the downside. Even though we got a pretty powerful move right here, it's definitely a possibility we come back up here and close this gap closer to like 178 and then go lower after that. If we zoom out here real quick to the weekly chart, again, the weekly is just barely hanging on to the 200 moving averages. This most recent weekly move actually broke down below those 200s. So at this point in time, the stochastics are rolling over, and it does look like we're going to retest those lows once again. Now, perhaps we'll just get that measure move down. Buying support will come in around the 120s or so, and then we'll never revisit these areas again before we go on a blue sky breakout. But in the meantime, we need to consider the fact that we're now under the 200 moving averages. They're basically flat, and now we're below the 8 and 21 as well. So we're below all four of our major moving averages for the first time in a long time, and Tesla's weekly chart is looking like it's getting very, very close to flipping into a bear trend. So when we're in a very clear bull trend, we have our blue 200 moving averages here. We break down below it, we back test it, we try to save the trend, and so far it looks like the savior of that trend is failing. And then if we do get that measure move breakdown, it likely takes us down to revisit the lows. And at that point in time, the 200 exponential and 200 simple will basically be flat or negative once again. So once these flip red, we'll be officially in a bear market on the weekly time frame and likely to see further downside. And if we just flip over here real quick to the monthly, we'll see once again the 821 bear cross on the monthly has already taken place. We also got the slope line flipped from blue to red. We have all red histograms. We're below the zero line. We're below the slope line. Everything is pointing to the downside for now. We came down here, we back tested the 821 cross, we got rejected, and then broke down from that level. So we're 6 days away from closing a very bearish candle and likely 1 month away from being at those lows once again. Now, I'm not bearish on Tesla overall. I actually think that they're a good company and I like the work that Elon's doing. But the truth is right now, when we look at these technicals, they look really nasty. And sometimes they look really nasty right before they look good. But that was the case, and they just looked good here for a little bit, and now they look nasty again. So while there's definitely potential for Tesla and further upside in the medium term to long term, I'm just not sure that right now is the time to be buying. So we'll keep an eye on this. We'll definitely look for a potential scalp move off the bottom of that channel if that level holds. We'll be watching out for bullish and bearish divergence as well as momentum. But for now, we nailed the Tesla trade after that vicious sell-off. We capitalized on almost 100% gains overall. And now it's time to sit back and wait to see where we go or potentially enter a position to the short side. As realistically, everything is pointing lower, momentum is to the downside, and if we want to trade with the trend for the highest probability of success, the trend is clearly bearish. So yeah, that's it. Just want to talk about Tesla here for a minute. I know it's a very heavily traded and owned stock, especially in the retail space, and a lot of the retail got really obliterated at the top, even though it was very obvious what was taking place with the bearish divergence and whatnot. And once again, they got obliterated when Tesla capitulated out of the channel, and basically they sold to us for pennies on the dollar. But now that we've moved back to the upside, everybody's screaming about Tesla and future targets. Cathie Wood came out and is claiming that Tesla will be at $2,000 by the end of the week or whatever her insane claims are. But rather than listen to the delusional targets of the greatest woman wealth destroyer in human history, I think we should probably just pay attention to the technicals and what the actual market's telling us. And we all know if there's one thing Queen Cathie is good at, it's making outlandish price predictions and selling a narrative based on those predictions. But the truth is, the only thing Cathie's actually been able to do is create wealth for herself, because she's getting a percentage of all those inflows into those ARK funds, which have done nothing but lose money for the last 3 years. So if she's got a 5-year time horizon, I'm counting on my watch here, Kathy, and you're running out of time because right now, everybody that's ever heard of you, bought into you, or believed in you is a loser. Not at life, just, their investments. So yeah, that was fun. Just want to take a look at Tesla. And obviously, Kathy went full retard with her $2,000 price prediction, so couldn't leave that out as well. But I had a good time. Hopefully you did too. But before I get out of here, there is one more secret that I want to share with you. And this is only for the people that made it all the way to the end. Please remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Well, that's it for today, guys. I'm going to jump in my Tesla and ride on over to the SpaceX rocket ship and go on a little ride here. Elon's assured me that everything's fine. It's completely safe and nothing could possibly go wrong. All right, later.